Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week of December 13th, 2015. I'm really looking forward to this update. I got some fun stuff to share with you. You can see I've got on the screen here a picture of, this is an article from Investopedia. I got a picture of Santa here. And the question is the Santa Claus Rally for real? So this is the time of year when we start hearing about some of these more so than the rest of the year. You know, these kind of timing things in the market, and the one in front of us now is the Santa Claus Rally that you hear about sometimes. If you Google it right now, you'll see there's all kinds of articles about the Santa Claus Rally. So, you know, you go to Investopedia. This is a great source of looking stuff up, financial stuff. They say, hey, about 80% of the time, there's either what they call the Santa Claus Rally or the December effect, where at the end of the year, stocks go up. And they say 80% of the time, December is one of the best months of the year. There's an average of about a 2% rise in December in the market. Well, that's pretty interesting. It's interesting, but is it really something we can act on? Would I be willing to go place trades, make an investment, you know, based on the fact that 80% of the time the market goes up in December? You know, for me, that's not enough. It's interesting, maybe a backdrop. It's good copy to read here in an article, and you know, maybe chuckle about or whatever. But is that a reason for me to go invest? And for me, I want just a little bit more. You know, if you've been following me at all for, you know, any period of time, you know I'm very much about the reality of price on the charts and the pattern. And we're going to get to that in just a minute. And I think the price pattern, the realities there are showing us something very definitive. But I thought this would be fun to cover, to talk about the Santa Claus Rally. Let me show you another article that I think is great. So here's an article. This is in CNN Money, written by Paul LaMonica. And I think it's great not because it's giving any kind of real clear direction on investment, but you know, here's his headline. You know, the Dow falls 310 points as oil plunges below $36 a barrel. We're going to talk about oil in a minute, but here's a great, you know, subline here, and it says, looks like oil is the Grinch stealing the typical Santa Claus rally that the market enjoys in December. That's awesome. I enjoy a good turn of a phrase, right? The oil is the Grinch stealing the Santa Claus rally. So again, is this something we can trade on? Is this something we can go put, you know, real money on the line? And you know, well, there's a Santa Claus rally 80% of the time, but this year the Grinch, you know, oil is the Grinch stealing the Santa Claus rally. Can we invest or trade based on this information? Not me, not me. I'm gonna look for something a little more definitive, something a little more analytical than this. This is fun to read, but I'm not basing my trades or putting my money on the line based on this. So here's another. This is a blog article, and actually one of my subscribers pointed this out to me and asked me, "Hey, Dean, what do you think about this chart and this effect?" Right. So this is looking at 60 years worth of data, 1950 to 2011, and what it's saying is there's this effect of year-end tax selling, that people, investors with losses are dumping them. They're taking their losses for tax purposes so they can take the deduction, and it's showing by the day of the month in December that selling on average, you know, peaks around the 10th or 11th, and by the 12th, then this December effect, the Santa Claus rally takes off. But here's the problem with a chart like this, right? This line is showing the average time, the percent of the time that December is positive. And if you draw a regression line through this, kind of like this, right? This is the problem with averages, is they're just that, right? They're the collection of a bunch of numbers, and with every average, there's what's called normally. They're normally distributed, right? There's normal distribution, and so there's a cone of probability, right? And each side of this is 3 standard deviations away. So we could be within normal ranges, and we could still be, you know, negative in these days, and even for the rest of December. So these things are fun to look at. They're kind of interesting, but I'm not going to be putting real money on the line. I'm not going to be making investments or trades based on these things. I'm going to be making my decisions on the realities of the current charts. So this is a good time. Let's go look at the charts now. So here's the S&P 500, and I wanted to point something out. So this is on a 60-minute chart. And I was interviewed on a financial show earlier this week, and one of the things, it was Monday, early Monday, and one of the things, we had a panel of folks and we were being interviewed, and they said, what's your prediction for the S&P 500 for the week? will it close down lower or higher on Friday from the Monday? And my answer was, looking back at the previous week, that on Wednesday and Thursday we had this decline. Friday we had a pull up. But if you've been watching my videos, I look for this pattern that if this was really going to be a change in trend, it would have to go up higher here, and it didn't. And on Monday we were looking at a pattern like this, and I said, boy, it just looks like a bearish pattern to me. I said, there's a 75% probability that we're going down to 2040 or lower. And there we went. By Wednesday we had hit 2040. We pulled up a little bit, and then Friday we went down dramatically. It's not that I have a crystal ball or anything like that I'm got anything magic going on. It's just there's just some powerful analytical tools. So see a bearish pattern, and where it came from out of a channel, high probability that it was going to go put in more lows. This is actually an Elliott wave pattern. This was a wave 1, 2, and now we're in a 3. All right, so it was a pretty clear pattern, something I recognized, and I was able to make a prediction based on that. Never 100%, but it looked pretty clear. I was able to say about 75% probability on that. So that was last week. So I've switched now to a daily chart. The real question is, what's it going to do next? Last week, that was interesting. Where are we at now? So every price bar here now represents a day. We were looking at a 60-minute chart before. And then notice this bearish pattern, right? We've got a low here. We've got what's called a lower high. It did not go below that one. And now we've put in another low. And I had drawn these purple lines, kind of highlight them here, as this was a channel that the market was in for a brief period. And I said, if it was to turn at this point and go up here, then we're probably going to go put in some more highs. But it broke out to the bottom side, which was the high probability thing. So we had a big drop on Friday, 300 points on the Dow. It may go down a little bit more, it may pull back up, but the real scenario here, the real highly probable thing is it's going to keep going down. That's just really clear right here on the S&P 500 daily chart. We've got bearish indicators with the software I use. We've got a bearish pattern, and even though we may get a bit of December effect or something toward the end here, the pattern is down for me. So I'm predicting more lows to come. Let's switch over to the S&P 500. I mean, this is the S&P 500. So let's switch over now to the Dow. Take a quick look at that. All right, so here's the Dow Industrial Average. Now you can see it's different from the S&P. We got the same pull down here. We got the same pullback up here, which did not go above this, but we have not come down to this low here. And it came down and touched it, but it didn't go lower. So will it? Well, I think there's a high probability it will. Again, we've got bearish indicators, and the S&P 500 already did. The Dow Industrials is 30 stocks. The S&P 500 is 500 stocks, and so that's a bigger portion of the market. So I think that we will go make new lows here. Again, we could pull up, we could do something like this, but I think more lows are coming. So that's my forecast. I'm pretty confident in it. So I'm bearish on the Dow and the S&P 500. I think we got more lows coming. We may see some pull up, but not too much longer before we see some more lows to come. And that has nothing to do with the Grinch or with Santa Claus. It's got to do with the realities of the chart that we're looking here. And that's what I base my trading and investments on. And speaking of oil and the Grinch, that maybe has stole the rally. Last week I had said, well, it really looks like it's found a bottom here. And clearly it did not. It went down fairly dramatically from there. But I also said, this was not definitive, that in order for it to have found a bottom and to have it to turn up, it would have had to pull up, take out this last high, here, and do this. Well, it certainly didn't do that. So it is still making lows. And, where's the bottom for oil? Man, who knows? We're certainly enjoying this at the gas pump. But, that same article I talked about where that great line about the Grinch stole the Santa Claus Rally, the same guy said that investors wouldn't touch oil stocks with a 36-foot pole. Well, that's pretty funny because barrels, oil's at $36 a barrel. Again, great turn of a phrase. So where's oil going? Well, right now it's bearish, and we don't know. And before this trend were to show that it ends, and that it, some kind of correction is coming back up, it's got to show us that pattern, that reality, and it's not there yet. Yeah, the last thing to look at here is gold. Now gold, a couple weeks before put in some new lows, from here. But now it is showing that pattern that I like to see. And look how we've got, this upslope here in the momentum of the, this downtrend had momentum. That momentum's coming out, and it's put in a new high. We like to see that. Now, if it does this again, if it comes, comes up, takes out this previous high here, that may be a really good sign that gold has found a bottom and is turning up. So we'll continue to watch that one really closely, because if it does, it's got quite a ways to go up. And if the market continues down again, gold is sometimes a safe haven. People move to that if equities are going down. So that could be there could be some interesting trades. We're not ready yet, but it's showing something very interesting here, and I'll continue to update it. Well, that's it for the week. Thanks, and appreciate you watching, and see you next week.